And that would be a great data to look at. It will be also great to look at, because majority of the studies done, uses a small sample number, and most of the time, when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
We saw nothing organic in the economy that was going to bring down inflation. So that means that the Fed needs to fight inflation.
The impact of high inflation on real income will start to be a bit more visible.
Really, the trajectory for growth is what's going to dictate if the Fed's going to be able to continue to raise rates aggressively.
We've been recalibrating Fed expectations all year long.
We have to be very careful, right? All the cyclical dynamics we're seeing are pretty much unprecedented.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures down 0.4 on the S&P, down 0.5% on the NASDAQ. A big week coming up, TK, for big tech.
Well, it is. It's big tech and Microsoft and all that, but the big document that just dropped is a Schedule 13D from Twitter. John, I've been going through it, and it's like reading Microsoft boilerplate as well.
Give us the highlights, Tom. Give us the highlights.
The highlight is a lot of lawyers had a lot of pizza over the weekend putting this boilerplate together, and the answer is it is radically complex. It's actually the anti-Nutella. You look at Microsoft, and they've been doing things simple, 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 simple. Musk and Twitter have to go completely opposite to get this transaction done.
Can they close this transaction? Bramo, that's the big question. I think it is an important question we've still got to ask.
Especially because we don't understand what other equity investors might be on board, whether this is entirely Musk, how he's financing this, will he have to pledge Tesla shares, how the timeline really has affected this whole thing, let alone just the exact terms of financing, including how much the coupon will be on that debt and how much money Twitter will actually have to generate.
And with all that in mind, is this going to be a for-profit business or a multi-billion-dollar moral crusade? I would suggest that if the interest payments are going to be pretty large, which they may well be, then I'd suggest that it has to be the former and not the latter.
When you have a leveraged buyout, you have to move beyond just moral crusade. You have to actually pay back the debt. And that is going to be the real question. What is that plan? How much can you value this company at $44 billion when there were no other bids? And frankly, the board said, yes, can we have another?
Speaking of earnings out already this morning. PepsiCo decent, following Coca-Cola yesterday. TK UPS doubling the buyback target to in 2022 to $2 billion. A beat as well on adjusted EPS, $3.05. The estimate, $2.88.
I'm so busy looking at this Twitter document. I missed that, John. And I tell you, UPS is important, John. I've always said this, logistics matters. What FedEx, what UPS in Europe, what DHL does, it really matters is a tone of the economy.
After the close, we'll hear from Microsoft and we'll hear from Alphabet as well. Let's whip through the price action for you.
Google.
We're down 0.4% on the NASDAQ. We're down 0.5%. Meta coming up tomorrow. I can't get used to it either, Tom. Yields lower by 3 basis points, 278.93. And there it is, Tom. 106 handle on euro dollar, 106.87.
Is Jordan Rochester in this hour or the next hour? I can't remember. Next hour, folks, you're going to really lean forward, Global Wall Street, and listen to Jordan Rochester triangulate this. Now, what it means, John, is euro-yen has been strong yen, weak euro for the last 18 or 20 hours. These are the nuances the pros are looking at. To Christine Lagarde, under a 106, this is not a nuance, it's tangible.
The man from Nomura coming up in about an hour's time. Lisa, another thing we've got to talk about is crude, up about 1/3%. Maybe the story supported this morning by China pledging to offer some economic support.
How much can they actually come in and stave off some of the economic weakness that has been spurred by lockdowns in their major cities? How much are we going to see that continue? Today, what I'm watching really is the negotiations with Russia. UN General Secretary Antonio Guterres is visiting Moscow. We're getting images from that. NATO Secretary General Jens Stoltenberg is going to be speaking around 11:45 a.m. He's been speaking with Ukrainian security officials. How much do we get a sense of some sort of resolution to this, or do people continue to sort of dig their heels in and expect a protracted war and conflict there? Today, we also get a slew of U.S. economic data. Want to focus on one point, and that is the housing data that's coming out. We're going to be getting home price data coming out around 9 a.m. How much do we see a real acceleration in the price of homes, even with mortgage rates that are the highest levels going back to 2010? If we continue to see that acceleration in home prices, what does that say about what a tight monetary policy looks like and how much more the Fed has to do? And of course, as we've been talking about all morning, John, it is a big tech earnings day. It is going to kick off all of them. Alphabet, I'm not going to say Google, Microsoft. I personally love the word meta because it makes me feel really existential, which I sort of lean into. But I do think that, the idea here is how much will cloud services really be a stalwart as advertising perhaps is a little bit more of a threat given some of the slowdown that we're seeing, at least in the perception of the consumer, or is that going to be proven a myth with the strength of the U.S. economy?
I love you, Bremo, but what are you talking about? You like to lean into the name Meta.
Meta.
I like to, be a little controversial. Honestly, it's just, it really makes sense for me when I hear my kids talking about currency online to play on their video games. The idea of meta kind of applies to life.
Here's what I'm going to do, and I just did this with UPS, catching up to you. I'm going to go back on all this pandemic, blah, 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 to 2019. UPS, 75 billion revenue, 2019, and we're modeling out well over 100 billion over the next 2 years each year. So these are revenue juggernauts, and that's where you see the buyback from UBS come in. I'm sorry, these are constructive pre-pandemic leaps, if you will.
Tom, look at the airlines too. So what have we heard from in the last couple of weeks? United, Delta, American, great numbers. JetBlue, they say second quarter revenue is expected to be a record result. This is how I'd frame things at the moment. On Friday, we're going to hear from Exxon. And a lot of people are going to be up in arms about how much money Exxon has made. There's going to be pushback to the oil patch about not building out capacity, not boosting supply. Maybe Exxon's not part of that story. Other names are. You can think of Pioneer. What about the airlines? The airlines are now minting money again, and they refuse to build out the capacity story. Now, I don't think that's an easy one to execute on. I think there's a big staffing and labor issue there. But when you speak to the airlines, they're very reluctant to bring their capacity back on anytime soon.
I'm an old fart on this, John. I'm going to be blunt. I'm going to go to the gates. They have a huge airport constraint. I don't pretend to be expert on it, but particularly in selected cities, I'm going to pick on Heathrow. There's major battles. If you raise capacity, where do you actually land your airplane and which gate do you roll up to? That's something no other industry faces.
But we talk about the airlines as if it's hard to boost that capacity because it is. But equally, Lisa, it's very hard to do the same in the oil patch, and the focus seems to be on the latter industry group and maybe not on the former.
It is more political given the politicization of a transformation in energy and how much that's also coloring some of the rhetoric around the oil patch. I think that there will be a lot of controversy there, but I think that you bring up a good point with the airlines. How long before people start talking about dividend payments?
John, quickly here, 2019, Exxon EBITDA rounded up 30 billion. They're going to pop 80 billion plus EBITDA down the income statement this time around.
Do you want to see what a beat looks like in the energy patch? Valero Energy, first quarter revenue, 38.54 billion. Lisa, the estimate 32.
Yeah, and how much are these companies not going to be able to mask some of the profits by writing off some of the Russian businesses, right? I mean, that's what we're going to end up seeing with some of the oil majors saying, look, our profits aren't that good, and you like look out, strip it out, and all of a sudden they look a lot better.
Maybe the European players will do a lot of that a little bit later. Brian Weiss is going to join us now, the Global President for Business Intelligence at Group M. Brian, great to catch up with you, buddy. We've been talking about this through the morning. We've agreed a price. Now the board's going to recommend it to shareholders. I want to understand from Musk's financing position whether this is a transaction you think is going to close with ease or not.
It's a good question. I really wonder what the plan is with respect to the debt, because the company of this size can't really sustain as much debt as they're planning to raise, right? So at the same time, it's pretty clear that what he wants to do is something that would be, shall we say, negative for the actual business, advertising, which is obviously our business. And that's to say, I really, really wonder, because he's got to find equity to take that out, presumably. And then are the other equity investors in the future going to be as oriented around Musk would be on less advertising in the business?
Brian,
that's the thing that's uncertain to me.
Brian, do you have a sense of what other interest there is in equity ownership alongside Musk?
I've only seen the reports that you have, I'm sure. Clearly there's a lot of capital out there. And so it's absolutely not implausible or impossible by any stretch of the imagination. But I think it's just the thing that stands out to me in this transaction.
Brian, I'm holding up my phone on radio here, folks, worldwide. I'm holding up my phone, and I got Google Play advertisement on Twitter with a cutesy pie video. 42 people had to put this ad together. It says promoted down at the bottom. Brian, is that what an Elon Musk ad is going to look like on Twitter?
You have to imagine. And I think another big question is, if you're going to spend 3 years proverbially sleeping on the floor of a Twitter headquarters, maybe not in San Francisco, but wherever they are, helping them evolve what the product is. They've got very capable people, of course. An important question is, how involved does he really plan to be in evolving what Twitter is?
There's about $2.50 of doubt between where the price is in the free market at the moment, or about $2 or so, and what the offer price is. Is that pretty normal, Brian? A $2 spread like that?
That was really wide, and I understand this the skepticism that's out there given what we've seen in the past, and again the example I just laid out as well. Like there's far greater uncertainty than other transactions I've seen of this nature.
Brian, great to catch up, buddy. Let's talk soon. Brian Weiss there of Group M. Some doubt out there, Lisa, about $2 of doubt at the moment.
Don't you think that is exacerbated by the fact that this happened like that? I mean, it was just the most quick and frankly, unspoken about until it happened deal that anyone can recall. So if it's done that quickly and there still are so many uncertainties and so much potential controversy, I understand the skepticism.
I'd be interested to see how that develops. Here's a line from China. Keep going back to this. I think it's so important given what's taking place in the economy at the moment. The lockdown spreading from Shanghai to Beijing. CCTV reporting the following. China Xi chairing a Central Financial Committee meeting. The meeting stresses the enhancement of infrastructure construction. China to boost fiscal spending on infrastructure projects. Tom, we're familiar with those kind of headlines around moments like these, aren't we?
Yeah, we are. And there's some serious issues in China right now. But what it comes down to, John, is their medical community, just as a general statement, is unable to do this, particularly given the lack of efficacy of their vaccines. That's what they're dealing with.
The latest out of China, futures down 0.5% on the S&P, on the Nasdaq too. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Call it Elon Musk's $21 billion mystery. Where will he get the cash to buy Twitter? Musk has agreed to buy the social networking platform for about $44 billion. He's outlined how the financing will work for that $25 billion of that, but he's been short on the details on how he'll cover the $21 billion remaining equity portion that he has personally guaranteed. He may get other investors, or he could sell some of his beloved Tesla stock. Russia's Foreign Minister Sergei Lavrov warns that there's a serious danger of nuclear conflict over Ukraine. Lavrov told Russian TV the risk cannot be underestimated. At the same time, he signaled that the Kremlin is willing to talk to the U.S. to try to resolve the confrontation. And the Biden administration wants to widen access to Pfizer's promising COVID therapy pill. Starting this week, tens of thousands of pharmacies will be able to order the pill, and the administration will launch more sites where people can be tested, examined, and get pills in one stop. The pill must be taken within 5 days of the onset of symptoms. General Electric is trending towards the low end of its financial forecast this year. That's taking the shine off a quarter in which it posted better than expected results. GE is struggling with the supply chain turmoil and the soaring costs of raw materials. GE splitting into separate aviation, health, and power businesses starting from next year. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Stories about what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now. We are dying slowly but surely, and our lifespan is reducing every day.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Earnings season is here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
The biggest second round effect will continue to be a pressure on commodity prices, which will cause further inflation pressure, which may cause a further need for central banks to curb that inflation in order to manage either stagflation or possible even a recession.
Ralph Hammers there, the UBS CEO, catching up with Bloomberg's Manus Cranny over in Zurich, Switzerland. Futures this morning are negative on the S&P and on the Nasdaq too, a mild move lower of 0.4%. Yields heading south by 2 or 3 basis points on a 10-year, a break of 280, 279.12. Tom, going into an important afternoon for earnings stateside.
Well, we're going to do earnings stateside right now, and to get us started on this, Liz Ann Saunders joins us to get equity coverage started this morning, Chief Investment Strategist at Charles Schwab. Liz Ann, let me start with the Schwab wheelhouse. What are we doing with our money right now? We've got 2 once-in-a-lifetime events, a pandemic and a serious war. What do you see in flows at Charles Schwab?
Fairly steady, and what we're seeing is actually consistent with some broader industry data on the interesting dynamic and relationship between attitudinal measures of sentiment. So if you look at a survey like AAII, a week ago, that hit the lowest percentage of bulls since 1992. So, and we find that what our investors are saying, the kinds of questions they're asking, suggest a lot of concern. But when you look at flows, when you look at a metric like the equity-only put-call ratio, you have seen a pickup in some nervousness, but nowhere near to the same degree as what you're seeing in some of those attitudinal surveys. So not a lot of shifting around of the money, but an expression of concern. And that's the complete opposite of what happened in March of 2020, when people were just dumping everything, but actually didn't express as much concern. So it's an interesting mirror image.
In honor of Eric Balchunas' new book on John Bogle, let me ask you the passive-active question right now. Given the uncertainties out there, the epsilon and the back end of the algebra, does Liz Ann Saunders go passive and hide, or do you actually try to find active management to get things done?
We always advocate for a little bit of a blend, and it also depends on what your overall objectives are. But I think the playing field is much more level now, active relative to passive. I think there's an improving opportunity for active to add some relative performance here, and that's not been the case, obviously, for many years. You're seeing a widening out, more of a dispersion, even among some of the large cap, the Super 7 kind of names, much more dispersion in terms of performance. And you're seeing it through earnings season, too. If you go to the tails, the companies that have missed earnings by at least 20% have gotten absolutely hammered, versus the companies that have beaten by more than 20% have done better, although not as well as has typically been the case over the past 20 years or so. But I think there are opportunities now where active, for the first time in a while, actually is playing on at least a level field.
Liz Ann, can you elaborate on that? The fact that upside beats on earnings have not been rewarded in the way that they traditionally have. Do you view this as, frankly, investors being forward-looking and seeing some danger ahead, or do you view this as people being overly pessimistic and not swooping into real opportunities?
I think it is in large part due to the sentiment environment, but also where we are in this cycle, the monetary policy cycle, rising interest rates, putting downward pressure on more highly valued segments of the market. Some of the really heightened speculative money that had fueled lower quality areas maybe not being as playful in the market right now. So I think it's a lot to do with where we are in the cycle, but I think it is some sentiment. And I think that does create opportunities. In fact, I think this very pessimistic sentiment environment, at least on the attitudinal side, does provide some support for the market here. It's one of the few positives that you can point to, is just that sentiment has shifted toward the bearish camp. You typically need a catalyst for sentiment to act as a contrarian indicator. I'm not sure we have one imminently, but that's not a bad backdrop than if everybody was still wildly bullish here.
Given the backdrop, Lizanne, of the macro dominance, do you see an opportunity in big tech, especially as we're expecting to see pretty strong earnings?
Well, it depends on how you define tech. Within tech, and on a year-to-date basis, last 3 or 4 months, it's actually value factors that are outperforming. I look at the Bloomberg factors on a day-to-day basis, and there's that value dominance even in a sector like tech. So I think you can still look in some of the so-called growthier sectors, but with a sort of a value mindset. There's this misperception out there that if you say value, you're looking for value, that you're limited to the sectors or areas that happen to be housed in the value indexes. You know, a reverse example of that is utilities. Defensive sector obviously been doing well, but utilities right now are more expensive by a pretty wide margin than the S&P. That doesn't mean they've become growth stocks. They still live in the value indexes. They just don't offer a lot of value. So you can look for value and quality and not limit yourselves to what lives in the value indexes.
Now, listen, UPS, I don't want you to talk about individual stocks, but UBS plans to, quote, double amount of share repurchase for this year. Give me the use of cash update.
So, you know, we had a record year last year. We were set up for that, but you've seen some companies start to back off of that, whether it's sort of the optics or some sort of political pressure. But I agree with you. What you said, I think it was during the break, maybe nobody else heard it, but with you in my ear, I think, you know, a company like UPS is certainly a bellwether, especially in this kind of market environment. Maybe that suggests that there aren't more productive uses for the cash from a longer-term capital spending standpoint.
Right.
I'll have to see more of their commentary.
And John, what's so important here is to understand that Lizanne Saunders is a required listen on radio, on television, because she's the only one I know who's actually read the 400 pages on Led Zeppelin over her left shoulder.
And she's welcome back, Tom, so long as she doesn't repeat anything else you might have heard in the commercial break.
That's true.
Lizanne Saunders, Charles Schwab. Lizanne, good to hear from you.
Hi, guys.
As always, fantastic. David Folkers-Landau over at Deutsche Bank just published. Here's the quote. The only way to minimize the economic, financial, and societal damage of prolonged inflation is to err on the side of doing too much. The labor market and household balance sheets are strong. The team over at Deutsche Bank go on to say the only way to push down aggregate demand is to raise rates higher and faster than, Tom, what might seem reasonable.
And the wheelhouse there not mentioned by Folkers-Landau is his study of currency dynamics. Since we spoke to Dr. Folkers-Landau, John, currency has moved in the worry direction for Folkers-Landau. And we're not there yet, but you really wonder how currency folds into what you just stated with Deutsche Bank here in a quarter, maybe 3/4.
The dollar index just south of 102,
Yeah.
at least a dollar yen, not far away from 130 in euro dollar. We're doing that parity thing again, aren't we? A 106 handle.
Honestly, how much, though, is this having to do with the momentum in the economy? And that's really what's driving this. And if we really do see a move, like he's saying, with a really restrictive policy, that would really throw things into a tizzy on the currency side, too.
Just what is higher and faster than what might seem reasonable?
Exactly.
We need to get them on the program soon. Futures down a third on the S&P.
I think a trip to London would work out.
On the Nasdaq down 0.4%.
Sterling's cratering. It's great.
You want to go to London to catch up with David Folkers-Landau?
Absolutely.
Okay.
Are you surprised?
Your expenses are nuts. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Live from New York City this Tuesday morning. Good morning to you all. Equity futures shaping up as follows on the S&P, on the Nasdaq, on the Russell. We're down about 1/3% across the board here on the S&P 500. On the Nasdaq too. On the month by almost 9 percentage points lower. On a session, down about 1/3. Year to date, it's even worse than that. You know the picture. On the Nasdaq 100 year to date, we are lower by almost 17 percentage points. The 2-year yield pricing in that more aggressive Fed relative to what they were doing more recently. QE and nothing. Yields up by 186 basis points on a 2-year year to date. Right now, 259.47. Today is not about the multiple, the valuation. It is all about the earnings. We need to talk about the earnings, Tom, from the likes of Microsoft, Alphabet, Facebook, Amazon, Apple. Those 5 names making up about 40% of the Nasdaq 100.
Well, and you wonder what they're going to do in terms of apologizing about how good business is, John, and I'll be looking at what they do with use of cash. I mean, with the huge uncertainties out there, what's the kind of leadership they're going to give us on those conference calls?
And looking forward to those calls. One call we won't get, Bramo, we will not get a call with Twitter later this week. We'll get the earnings. I'm fascinated to see what those earnings are.
Especially
given that we will not get an earnings call.
And especially because, frankly, have you seen any consistent valuation of Twitter? And the fact that the Twitter board took this value at face value, it was the one and only offer, and ran with it, tells you something.
It's going to be very interesting through the week and way beyond. I want to finish on this briefly. Euro dollar with a 106 handle. Now, we had a 103 handle at the cycle lows of the last cycle in late 2016, early 2017. I think, Tom, you and I have argued that that was an objective, that was a goal. I would say this is not a goal right now for the Europeans and the ECB, to have inflation where it is and euro dollar trending where it's been trending at 106.85 right now.
Well, 106.85 is on the cusp of trending. Any breakdown from here will be noted. Jordan Rochester scheduled to be with us to provide wisdom there here in a moment. I guess we got Kaylee, John, right, this morning?
We do. We have Kaylee Lines. We get lucky, Tom. That's your cross-asset price action with your single names, your movers, and a ton of earnings. Here's Kaylee Lines.
A ton of earnings indeed, and inflation really is the theme that drives through all of them. On the one hand, you have UPS up about 2.5% after profit beat expectations. Yes, they are facing higher prices, but they are having success in passing those on through price increases. As a result, profit coming in ahead of what analysts expected. Whirlpool's an interesting one. Shares are higher by about 2%, even though the company, which of course makes appliances, cut its forecast for the top and bottom line due to inflationary pressures, concern around a demand hit because of the economic environment and supply chain issues. It did, though, announce a strategic review of its EMEA business, so that may be what's lifting sentiment this morning. Very different story for General Electric. Those shares are down more than 3%. Yes, it beat on the top and bottom line in the first quarter, but it said for the full year, earnings are likely to come in at the lower end of the range. You guessed it, inflation and supply chain problems, a big headwind. for that company in particular. To bring it back to the Twitter story, which you guys were just discussing, of course, Elon Musk buying the company for $54.20 a share. Interesting, though, in early hours, it is still trading below that price. $51.91 is where we trade, up just about 0.4%. And of course, the big issue, the questions we still have, how exactly is Elon Musk going to come up with that $21 billion that he personally has guaranteed? How does his Tesla stake factor into that? Tesla right now basically unchanged in early hours. And then another company that is involved in this saga to some extent, Digital World Acquisition Corp. This is the SPAC that plans to take former President Donald Trump's media company public at some point. It was down 13% yesterday on fears about what Musk's acquisition of Twitter might mean. Would that mean that Trump returns to Twitter? Fox reporting that will not be the case. A little bit of a rebound for those shares, up about 3% before the bell, Tom.
Kaylee, thank you so much. Greatly appreciate that. Again, the VIX from that 30 level into 27.54, a bit of a constructive market as well. Right now, and yes, the parchment is from Cambridge and the London School of Economics, but far more, she is from the north of England. She has a nodding acquaintance with the football team at Preston North End. She is the United Kingdom ambassador to the United States. Karen Pierce joins us with extraordinary service to her nation at the United Nations. Karen, you are so qualified, Ambassador, to this question. Is it every nation for itself right now against Mr. Putin?
No, I think it would be a huge mistake to think this is the end of collective security. But Putin has done serious violence to the international world order, as well as to Ukraine. But those bonds that bring NATO together, the ties that bring the UN together, they're still there. There's damage because of Mr. Putin at the UN, but I don't think this is the end of collective security.
Among others, the Times of London today notes a partition here of Ukraine using British weapons. Does that bring the United Kingdom closer to direct confrontation with Mr. Putin?
No, I don't think so. Under the UN Charter, which, if you like, is the guide for international relations and international affairs, under the UN Charter, Ukraine has every right to ask other countries for help. And we are responding to that. Other NATO allies like the US, obviously, also France and Germany, Czech Republic, we're all responding so that Ukraine can defend itself, not so that we can go and fight the Russians, but so Ukraine has all the tools she needs to defend herself. But, you know, let's be clear, we're in this situation because Mr. Putin chose to violate international law and international norms and invade Ukraine.
Ambassador, this is a delicate question, but I do wonder, in the face of some of the unity that we see from the outside of NATO, how delicate the conversations are with the U.S. and the United Kingdom, with Germany, about perhaps curtailing some of the purchases of oil and gas from Russia.
It's a difficult question, more for countries like Germany than for the UK. We only get around 3 to 4% of our fuel from Russian hydrocarbons. The Germans obviously have a much higher proportion. But gradually over time, we will work out a transition away from Russian hydrocarbons, away from dependency. This is the sort of work that's been done in G7. It's not going to be overnight, but we are going to accelerate that transition.
How important is it, Ambassador, for nations like the U.S. and like the United Kingdom to help Germany in this transition to ease the pain in the short term, as Germany has come out and basically said, the Bundesbank, that they're going to go into recession if they actually ban immediately oil and gas imports from Russia?
We are all helping each other, just as we have NATO on the collective security side. So the G7 is helping countries like Germany manage this transition. The UK and the US are doing more to get LNG into Europe. When I was in Baltimore recently, I was at the port. You can see a big LNG terminal there. That will be piped to the UK, and we will pipe it on to Germany and other countries in Europe. So we're trying very hard. We've also released some of our strategic oil reserves.
Ambassador, from another time and place, there is the British Navy, and I think it's been undercovered here. Yes, there's the Black Sea and the distance of the Black Sea and such, but there's also the tensions of Finland and Sweden. Explain to us what the United Kingdom can do to keep the seas open of the Baltic Sea and then up north across Norway to Russia. What can be the projection the United Kingdom can do to provide for peaceful northern seas?
That's such a good question, keeping the seas open. And of course, it's not just in and around Europe that freedom of navigation is under threat. We see that elsewhere around the world. But you're absolutely right. Freedom of navigation has been a central plank of economic development of nations for centuries. As you also say, Britain is a maritime nation. That's our history. It's in our DNA. We take freedom of navigation very seriously. We send our ships round the world to uphold that right of freedom of navigation, as does the United States. So a large part of what we do in the Baltic Sea is about just being there and asserting the right of freedom of navigation.
Ambassador, just to reflect on Germany's decisions over the last couple of decades, many people warned them about their dependence on Russian energy. Those warnings were ignored. They've clearly made a policy mistake. The Greeks also made a policy mistake 20 or so years ago, and they were punished with austerity by the Europeans. They had to make some terrible decisions that plunged their economy into a depression. Why are we treating Germany differently when they've made a policy mistake and seemingly we have to wait for them to make their adjustments?
Well, I think really primarily that's a question for the European Union. Germany is still a member. We, of course, are not. But I think also everything we do now builds on what went before. We learn from what went before. We learn how to do things better. That's a continuous process.
Ambassador, thank you for your time today. Ambassador Karen Pierce there. Tom, that was a piece from Paul Krugman, actually, in the New York Times over the last couple of weeks, asking that question. I think is a very important question. And if I was a Greek politician, in fact, a Greek citizen, looking at how they'd been treated over the last couple of decades, I'd be very, very disappointed about the decisions made by German politicians and the free pass they seem to be getting from some people in Europe.
I don't have in front of me the notes on Mr. Schroeder over the weekend or late last week as well, but there's still a rationalization going on in Germany about how they got to this point. And what I would suggest, John, is there's a profoundly new rationalization with the end of the French election. It's like a new day on a Monday, on a Tuesday, whatever. It's a new day here for Germany and France to coalesce a plan.
And not just Schroeder, Lisa, but also Merkel as well. And what leaves me scratching my head continuously over the last couple of months are the people treating this conversation as something new. Who could have told? Who would have been able to tell that Russia would have ended up doing something like this? There was warning after warning for 20 years.
To your point, though, about austerity and how Greece was treated very differently than Germany, this highlights to me the need for at least the outside appearance of unity at NATO, right? I mean, there hasn't been castigations. There haven't been outward, basically people trying to lash into Germany for past mistakes, at least not on the diplomatic level. They're trying to come to some agreement, and they want to help with that, even if that doesn't necessarily cohere with past history.
The former finance minister of Germany, Wolfgang Schäuble, was seemingly very, very okay content with watching the Greek economy plunge into what many people regard as a depression. And Tom, at the same time, we've got German politicians who want to avoid a recession, and they don't want to pay for the mistakes that have been made on their energy policy for the last 2 decades. I just find the treatment of southern European countries versus, say, the core of Europe to be very different in, I guess, a very different crisis. From New York City, we'll catch up with a man on Europe later, Patrick Armstrong of Plurimi Wealth. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. It will be one of the biggest leveraged buyout deals in history. Elon Musk clinched the deal to buy Twitter for about $44 billion. Taking the company private is just the first of what's likely to be numerous changes. Musk has advocated for removing restraints on speech and has cast doubts on the advertising model that accounts for the bulk of Twitter's revenue. President Biden may add a global food aid request to the military aid package for Ukraine that he's sending to Congress. The war has disrupted exports of wheat, corn, and other foods from Russia and Ukraine, and there's growing bipartisan support in Congress for providing as much as $5 billion in aid. Beijing has begun mass coronavirus testing of millions of its residents. It's part of an unprecedented scheme to squash Omicron's spread before it spirals out of control in the Chinese capital. Nearly 20 million people will undergo 3 rounds of COVID testing through the weekend. And Securities and Exchange Commission Chair Gary Gensler has floated an idea aimed at increasing transparency in fixed income markets. He wants to slash the amount of time that traders have to report many bond transactions from 15 minutes to 1 minute. Gensler says that disclosures have generally failed to keep up with technology. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its 2 biggest billionaires.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
This is a defining moment. Our decisions in these days will shape decades to come. Our response to Russia's aggression today will decide the future of both the international system and the global economy.
That was Ursula von der Leyen, the President of the European Commission, from New York City this morning. Good morning. Futures are negative 0.4 on the S&P. On the Nasdaq 100 too, down by almost 0.5%. We've talked about it multiple times already this morning. After the close, you will hear from Alphabet and Microsoft. You'll hear from Facebook tomorrow, then on to Amazon and Apple on Thursday. Meta tomorrow. I can hardly wait to hear from Mark Zuckerberg.
Just think if they merged.
What, Meta and what, Tom? Alphabet?
Alpha Meta.
Can you see that getting cleared by the regulator, TK?
Yeah.
I can't see that happening.
Let's move on now. We do with futures negative 17. Again, John and I watching yen 127.63. We now bring it up with Joe Matthew. It's something a bit off the radar, but it just won't die. The gentleman from West Virginia, Joe Matthew, will not let the Keystone Pipeline die. Away from we're balanced and all that, where's the Keystone Pipeline in the zeitgeist of Mr. Manchin and everybody else in the Matthew world?
Well, that's a great question. It's bubbling to the surface. I think we can say here, Tom. Thank you very much.
Beverly Hillbillies.
Look, it all goes back. That's right. It all goes back to the memo last summer. We wouldn't be having this conversation right now if the White House took that more seriously. And by the way, that $1.5 trillion that Joe Manchin said he was open to passing, 9 months ago, would be even more than likely could be generated right now. So, I do wonder if there's a little bit of remorse at the White House about this. But Joe Manchin says, yes, he's talking to Republicans here. This is important, about a climate energy bill, so the Democrats would not have to use reconciliation to do it. Imagine a world in which Republicans vote yes for a climate bill that came from the Democratic administration. Only could happen likely with the help of the gentleman, to your point, from West Virginia.
I mean, Joe, what's so important here within the battle in the politics is, and Greg Valliere mentions this with AGF this morning, how shockingly alone the progressives are right now. How alone is alone for the left?
Boy, I will also note, though, that Greg Valliere, who I spoke with last evening, struck a note of optimism in his outlook for the week, suggesting that the doom and gloom that we're all referring to every day is a bit overdone here. Though if you are a progressive, this is a pretty gloomy moment as you watch Elon Musk take over Twitter, assuming that deal closes, and it hasn't, and wonder exactly what's left of the Build Back Better agenda. If it's going to be dictated by Joe Manchin, then no, progressives are not likely going to be very happy. And we can add Elizabeth Warren out of the chorus of those on the left who are concerned about this Twitter deal. She says it's time for reform and regulation.
Well, Joe, let's sit on that for a minute. Jen Psaki yesterday at the press conference coming out and saying, as a general matter, no matter who runs or owns Twitter, the president has long been concerned about the power of large social media platforms. The president has long argued that tech platforms must be held accountable for the harms they cause. Why is Elon Musk ownership over Twitter so concerning for the Democratic Party?
Isn't this something, the deal's not even closed yet, and a full-throated statement like that, one that was clearly rehearsed, also mentioning, by the way, I've got this in front of me, reforms to Section 230. Republicans said, what? We've been talking about that for years. Now the White House is on board with a potential attempt to reform 230 here. There are questions about whether the antitrust movement gets a little bit of energy out of this, but also whether that idea of reforming Section 230 can happen on a bipartisan level. You have to remember that Democrats and Republicans love to hate social media, but they do it for different reasons, and that could make any negotiating around this very difficult.
But Joe, on a tangible level, what is it that the Democratic Party objects to that Elon Musk puts out there?
That's a great question. I'm not sure they can articulate that. I think the concern is hearing how happy a lot of Republicans are, who are, look, they can envision a world in which Donald Trump is allowed back on the platform. But I think the problem is the uncertainty around what we call free speech. What does that mean for hate speech on Twitter? What does that mean for some of the stuff that we saw going back to the campaign in 2020? Is that going to be a resumption of some of the problems? Look, Twitter has been problematic for a lot of people, and progressives are worried about what that language could lead to walking up on the midterms.
I just mentioned, Joe, you didn't get a briefing from anybody in Washington on Section 230. 231, which is codified here in New York, which is I'm not allowed to tweet during surveillance. That's,
231.
Very important. Section 231 is I can't tweet during surveillance. Tell me about the Biden White House. I mean, it's getting to that point where the game starts with animals like you about who's going to stay, should I stay, should I go? Where's that ballet right now?
Well, Cedric Richmond is about to go, but of course it's to the DNC. Look, there's a lot of question about what happens to Jen Psaki, who we just mentioned, the press secretary at the White House, who had signed on, we had been told, for a year. And a difficult position to fill, and I think that's why the White House has been slow-walking her eventual departure here. But interesting, all the cabinet secretaries seem to be in place. Even Marty Walsh is hanging, just ask Jonathan, in a hotel here in Washington, even though he might prefer to be in Boston.
What do you make of this with the press secretary? That, in all likelihood, there might be a broadcaster, well, I won't name this morning because I can't be bothered, who's planning a show for her.
Yeah. I find it interesting that most of the hard questions about this, and there have been questions about a conflict of interest, you're at the podium delivering word from the administration, but also it is widely reported that you'll have a program on a cable news network when your time is done. Most of the questions have come from that network. There is some concern in that newsroom about the perception of Jen Psaki continuing to do this and walking into a network with that type of potential baggage. I don't know. This could be a new look here for this particular job.
John, I think a new look here. Can you see Anne Marie Horton as press secretary?
Are you auditioning her now?
You know, it's a scary thought.
Are you suggesting that's the political party she might want to represent?
Oh, I don't know about that. She could represent both.
What are you doing here, Tom?
We have
I mean, TK, to make the point, and let's get serious about this.
Yeah.
This position should be held by right now by someone who was meant to unite the country, both sides of the political aisle. If you go to the speech over the weekend from Emmanuel Macron, when he won that election, there was an acknowledgement from Macron that he won because he wasn't the other person. You have to remember back to the election in the United States of America that a lot of people voted for President Biden because he was not the other person.
Yeah.
And a lot of people expected him to govern that way. Yeah. To have someone so partisan in the White House, Tom, that they're going to walk across the road and start a job at MSNBC after being the press secretary, I think more people should be uncomfortable with that than they are. And no one's talking about it because we've seen so much of that in recent history.
The parallels are really apt, John. And I would point out, as I did yesterday, this from Ipsos in France, 17% of the left voted for Madame Le Pen. And that's just stunning. Those political divisions, and where when it's all over, you got to govern for everyone. How distant are we from that?
Joe Matthews, sound on weekdays, 5 p.m. Looking forward to it. Joe, thank you. On Europe, Patrick Armstrong, Chief Investment Officer of Plurimi Wealth. From New York City, this is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah
ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame. Sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Fed officials are trying to achieve the best version of something that looks like a soft landing that they can.
For the most part, the market is fully priced in for a 50 basis point rate hike.
What's happening on the FX market at the moment is also very much driven by monetary policy.
We're starting to see the brakes on the economy that the Fed has been trying to put on.
We're still in that knee-jerk reaction of rates are going higher, growth is slowing down.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Lots going on today, but it is Technology Earnings Day, the beginning of the onslaught. A wonderful guest coming up here on innovation and the rewarding of technology. John, Microsoft will state.
Yes, and we'll hear from Alphabet, we'll hear from Facebook, we'll hear from Amazon and Apple through the week as well. Those 5 names, Tom, 5 names making up 40% of the NASDAQ 100. They are big, big animals, and this is a big, big week for that particular index. It's down hard on the month. It's down much more so on the year.
John, we're going to do it surveillance, what we've always done, which is take a bigger, broader picture at times. Patrick Armstrong to join us here on the bigger view of technology. John, from where you sit and with your London heritage, how alone is America with big tech?
I think the names speak for themselves. Think of the big tech names. They're all here in the United States of America. That's something European hasn't been able to secure a breakthrough on in any material way. And that was the story in the last 10 years. That was why there was a U.S. bias when it came to equity exposure, because that's where those names were. This time around this year, that's where the weakness has been, not the strength.
With the war, with everything else going on, the central bank derby, John, we haven't discussed Europe limiting the technology companies as we saw last week. How big a constraint is that on Europe?
Easier to regulate them, Tom, when they're not based in Europe, wouldn't you say? Isn't that the story? And that's always been the accusation over the last decade or so as well. My attention when it comes to Europe shifts towards the central bank, Tom, with euro dollar trading with a 106 handle, and an ECB that some people think may hike later this summer. Perhaps they'll have to, Tom, with inflation where it is and the euro trading where it is right now.
Euro 106.76, the yen not through 128, 127.56, and the dollar really not right now, folks, buttressed up against a 102. Lisa, it does come down to all that we covered, economics, finance, investment, and it redounds onto Washington as well. You wonder how technology and this boom they're having, big tech, will be greeted in Washington.
Well, we already know it's going to be controversial, with a lot of Democrats pushing back on the idea of Elon Musk taking over Twitter on a larger scale. In Washington, I think more interesting possibly for big tech is what the Fed decides to do. Have we already priced in Fed policy, a tighter Fed policy, with the $215 billion hole in tech valuations that were erased in April? I mean, I just wonder, have we priced it all in, or is there more to go?
John, to the data check, bonds are giving me no love at all. It's up, it's down, the yield, it's this, and there's some big moves as well. 5 basis points on the 10-year right now, in from that 280 level into 277. Are bonds giving you a signal, John?
Right now, I think a bit of a growth scare in the last 24 hours, but it's been brief, and it's only been a couple of days. So I think we've got to see how things work out in China. That's how we started the week, with yields lower off the back of the China fears that the lockdowns would spread from Shanghai to Beijing. Yields lower again today by 4 basis points to 277. But I'd add in crude is higher, and we've got a different stance from the policymaker in China today. China pledging to stabilize the economy, whatever that means, through policy. That's some verbal intervention right now. Crude just short of $100 a barrel. Yields come in ahead of next week. It's the quiet period for the Fed. No more Fed speak this week. Everything's in. The only real data point left for the Federal Reserve is the employment cost index, which comes out on Friday. Beyond that, full steam ahead to May 4th, Tom.
And John, Farm Journal, corn still above $8 a bushel, 807 after coming up near 818, 819 as well. This ends our Farm Journal coverage. Right now, in the United Kingdom, Patrick Armstrong joins us, Chief Investment Officer of Plurimi Wealth. Patrick, I loved your note. It reminded me of David Stubbs thinking at JP Morgan on, wait a minute, would everybody stop and look at these technology juggernauts? How do we value them, and what do they really mean to our greater economic system? How do you frame Microsoft?
Yeah, the juggernauts you can value with traditional approaches, and I actually think they're reasonable investments. If you look at free cash flow generation, earnings generations, even a little bit of dividends on the mega cap companies now, all the traditional approaches to value companies work for them because they are producing earnings, are producing revenues, and cash flow, I mean. Where I don't think the traditional approach works is the tail end of the NASDAQ, the big innovative companies that have no earnings and no real path to profitability, in my opinion. Those are the ones that when interest rates were zero, negative real yields on treasuries, you could take a punt on those and hope that with an infinite time frame, they would grow their way into something that would make sense on an infinite multiple. With a higher interest rate